The bank reconciliation. It's a measure used to ensure that errors and omission, as well as fraudulent transactions, are detected at an early stage before the financial statements and reports are compiled. This topic requires the mastery in the preparation of cash receipt and cash payment journal, the recording of adjustments, omission, and errors in the general journal, the posting of these journals into the bank account, and properly balancing and closing off the bank account. In accounting, an entity is described as an accounting or business entity whose financial performance can be determined and recorded into accounting records apart from the owner's possession. In other words, there should be a separation of business possessions from owner's personal belongings. It is for this reason that a separate bank account is kept with a financial institution in which the entity can transact independently apart from the owner. The banker will update the entity of its affairs by sending through a monthly bank statement reflecting the cash flow activities for each month. These cash flow activities would have been recorded in the cash receipt journal and the cash payment journal in the entity's books. It therefore becomes necessary to reconcile the bank statement with the entity's accounting records. The reconciliation procedure will be easier if similar items are marked with a tick while outstanding items are marked with circles. The reconciliation will start by comparing the bank statement received from the financial institution with the entity's records. On the bank statement, the following items will appear: daily deposit made by the entity, withdrawals representing checks presented by creditors for payment by the bank, and the closing balance. On the entity side, the following records shall have been kept: the cash receipt journal, where cash deposits were recorded, the cash payment journal, where all checks that were issued to creditors were recorded, as well as the bank account in the general ledger. The reason for reconciliation is the fact that the closing balance in the bank account of the entity, more often than not, is different from the closing balance of the bank statement. To perform a reconciliation, the entries on the bank statement should be compared with the entries in the entity records, and the entries will be compared as follows. The deposit side of the bank statement will be compared with the deposits that were recorded in the cash receipt journal, while the withdrawal side of the bank statement will be compared with entries that were recorded in the cash payment journal. The comparison will be done as follows. Similar deposit on the bank statement will be ticked with deposits that were recorded in the cash receipt journal. Outstanding items on the deposit of the bank statement will be the following items: the EFT transfers representing electronic deposit, interest on favorable balance, and other direct deposit. These outstanding items will be marked with circles. On the cash receipt journal side, items that will remain outstanding will be the month-end deposits, as well as errors that were committed while recording into the cash receipt journal. These items will each be marked with a circle. On the withdrawal side of the bank statement, we will compare the checks by looking at the check number and the amount, comparing the two with the checks that have been recorded in the cash payment journal. Similar check numbers and amount will be ticked. Similar EFT payments will be ticked with EFT payments that have been recorded in the CPJ. Outstanding items under the withdrawal on the bank statement will be EFT transfers representing payments that were done electronically, stop order and debit order payments, interest on overdraft, bank charges, and unpaid checks. These items will be marked with circles. In the cash payment journal, outstanding items will be errors that were made while recording entries into the CPJ, checks not yet presented to the bank for payment, EFT payments not yet captured in the journal. All of these items will be marked with a circle. After the comparison of entries have been done, the next step will be to prepare the supplementary cash journals and the bank reconciliations in the book of the entity. The first step will be to prepare the supplementary cash receipt journal. The first entry in the supplementary cash receipt journal will be to bring down the total from the cash receipt journal before the reconciliation, bring outstanding items from the bank statement, calculate the adjusted total receipt for the month. Next, prepare the supplementary cash payment journal. Bring down first the total from the CPJ before the reconciliation. Bring in outstanding items from the bank statement. Calculate the adjusted total payments. Post these adjusted totals of the receipt journal and the cash payment journal into the bank account. Determine the adjusted closing balance. Proceed by preparing the bank reconciliation statement. The first entry on the reconciliation statement will be to show the closing balance as reflected on the bank statement. Bring all outstanding items from the cash receipt journal and the cash payment journal. Reconcile with the adjusted bank account balance. This is the sample of the bank statement. The top part on the left-hand side shows the details of the account holder and the date of the statement. The top right-hand side reflects the details of the banker, the account number of the account holder, and the branch code. In the middle part of the statement, the account summaries are reflected, starting with the opening balance, the total withdrawal for the month, the total deposit, and the closing balance. The greater part of the statement will show the date for daily transaction, the column for check numbers that were presented to the bank for payment, the details column showing the names of creditors paid, the names of cash depositors, and the abbreviations used to explain the entries on the bank statement. The statement will also show the column for withdrawals or debit entries representing payments done through the bank. There is also a column showing the deposit or the credit entries made into the bank account. The balance column shows the daily and month-end balance. The statement concludes by showing the meaning of the abbreviations used to explain the entries made in the bank account. Let us work through this example. At the end of June, the trader received a bank statement from his banker, shown on this presentation on the left-hand side. On the statement, the following are appearing: the date of the transaction, check numbers for all the checks that were presented to the bank for payment, the details of entries as shown in the bank account, the withdrawal column showing all the payments that were done through the bank, the deposit done into the bank account, the daily bank balance, and the month-end favorable balance of 215,800 rand. On the right-hand side of the presentation are the records as kept by the entity. In the cash receipt journal, the entity recorded all the cash deposits that were done into the bank account, while the cash payment journal reflected all the checks that were issued to creditors. At the end of the month, these cash journals were closed off to the bank account to determine the closing balance. And the closing balance was calculated as a favorable balance at the end of the month of 186,300 rand in the books of the entity. This closing balance is not the same as the balance that was reflected on the bank statement. Therefore, there's a need to investigate the difference in the amount. We will therefore reconcile the entries in the cash journals by comparing them with the entries on the bank statement. We will start with the cash receipt journal. We will compare the bank column of the cash receipt journal with the deposit column of the bank statement. The first entry in the cash receipt journal was recorded on the 9th, and the deposit that was made was 4,200. We will trace this deposit on the bank statement. On the 9th, there's a cash deposit that was made of 4,200. Both of these amounts will be ticked. The next deposit in the cash receipt was made on the 15th, and the amount is 72,600. This deposit will be traced on the bank statement. On the 16th, there's a cash deposit showing of 72,600. The amount are the same. Both of these entries will be ticked. On the 18th, there's a deposit of 66,100 that was made in the cash receipt journal. This deposit will be traced on the bank statement. On the 18th, there's a cash that was deposited, and the entry of the deposit recorded 166,200. The entries are not the same, therefore they will not be ticked. The next entry in the cash journal was the entry made on the 20th, and the total deposit was 42,000. On the bank statement, on the 21st of June, a cash deposit was made and the amount was 42,000. Both of the entries are the same, therefore they will be ticked. Going back into the cash receipt journal, all the amounts are ticked except for an entry which was different from the entry recorded in the bank statement. This entry will not be reflected and shown as an outstanding item. Going to the deposit side of the bank statement, we investigate if there are items that are unticked. At the 30th, there's an item marked as EFT from Moloto. The amount is 25,000. This amount is unticked. Therefore, we will reflect it as an outstanding item by putting it in a circle. This entry is only reflected on the deposit side of the bank statement. It's not reflected in the bank column of the cash receipt journal. Next will be to reconcile the cash payment journal with the withdrawal column of the bank statement. The first check that was recorded in the cash payment is check 101, the amount 1,300. We will trace this check on the bank statement. On the 5th, there's check 101, the amount 1,300. It is similar to the check recorded in the journal, therefore both entries will be ticked. Check 102 in the cash payment journal, the amount 7,700 will be traced on the statement on the 17th. Check 102, amount 7,700. Similar entries we tick. Check 103, amount 3,200. It will be traced on the statement and it's not reflecting, therefore the amount will be put in a circle. Check 104, amount 4,500 will be traced on the bank statement and it's not appearing, the amount will be put in a circle. Check 105, amount 3,500. When it is traced on the bank statement, it appears on the 11th, amount 3,500. Similar entries, both are ticked. The last check in the cash payment journal is check 106, amount 15,000. Traced on the bank statement and it's not reflecting, the check will be put in a circle. In the cash payment journal, amounts are ticked. Amounts that are outstanding are in the circles. On the withdrawal column of the bank statement, we investigate if there are items that remain unticked. On the 12th, there's an EFT, the amount 5,600. It's not ticked, therefore we put a circle. Day 23, there's a UN amount, 4,200 is unticked. We round it with a circle. Day 26, the DB entry, amount 6,300 is unticked. We therefore round it in a circle. Day 30, there's an SO amount of 800 rand that is unticked. We also round it in a circle. There's also an SF entry, amount 1,200 is unticked. We also round it in a circle. Then we go to the note to get explanation of the difference in entries and the abbreviations that are shown on the statement. The first note reflects the deposit made on the 18th as correct on the bank statement. In other words, the amount was understated in the cash receipt journal. Therefore, when we do the reconciliation, we will have to take the difference into account. The next note, it's about the UN abbreviation. It says that the UN, it's a returned check which was received from Peters in full settlement of his account of 4,350. When we have a check that has been dishonored by the bank, this check will have to be reversed in our books. How do we reverse entries in our books? We will record them on the opposite side of the initial entry. The next item is the abbreviation for EFT. It shows that the EFT that was made by Moloto was for the rent for the month. The debit order payment, which is the DB, was for the payment of the vehicle, while the stop order was the payment for an insurance premium. The SF means the service fee charged by the bank. The EFT for bills was an account payment from a creditor. After the comparison of entries have been completed, the preparation of supplementary subsidiary journals will follow. Note that the bank statement will be used as a source document in the journals. Starting with the supplementary cash receipt journal. At the end of the month, the first entry that will be shown will be the total brought down from the CRJ before the reconciliation. The amount, 184,900. Then bring all the outstanding deposit on the statement in the journal. The first deposit was the deposit that was made in error in the cash receipt journal. Show it as deposit in error under the details. Show only the understated amount of 100 rand. The next entry is the rent received, which was deposited through EFT. Show it under the details as rent received. Total amount 25,000. When all the outstanding deposits have been recorded in the CRJ, close off the CRJ by calculating the adjusted total. Moving to the supplementary cash payment journal, we will start with the first entry at the end of the month, which will be the total brought down from the CPJ before the reconciliation, the amount 35,200. Go to the withdrawal column on the bank statement, bring in outstanding items in the CPJ. The first entry that was outstanding was the EFT payments to a creditor. Show it in the CPJ as accounts payable, amount 5,600. The next entry is a dishonored check that was received from a debtor, which must be reversed in our books. This check was initially recorded in the CRJ. To reverse it, we will record it in the CPJ, show it as accounts receivable, amount 4,200. We are reversing the amount that was deposited. The next entry is the debit order payment for the installment of the vehicle. Show it as accounts payable, total amount 6,300. The next is a stop order for insurance. We will show it under details as insurance. Amount 800. Last item is the service fee. Show the service fee as bank charges. The amount 1,200. After entering all the outstanding withdrawals in the CPJ, we will close off the CPJ to calculate the adjusted total payments. The next step is to post the totals from the journal into the bank account. In the bank account, we will start with the opening balance that was given at the beginning of the month. We have shown it as a balance brought down on the debit side as 36,400. Bring the total from the cash receipt journal on the debit side at the end of the month. Show it as the total receipt, the amount 210,000. On the credit side at the end of the month, post the total payments from the CPJ, the total amount 53,300. Balance off the bank account by determining the highest total. Close off the account by transferring it to the opposite side. Calculate the missing figure. Show it as the balance carried down, which will be shown on the opposite side as the opening balance for the following month, which was brought down from the opposite side. The amount was calculated as 193,100. The reconciliation will be concluded by preparing the bank reconciliation statement, having columns for details, debit column for outstanding check payments, and the credit column for outstanding deposit. All the outstanding deposit and outstanding check payments will be recorded in this statement. The first entry will be to start with the closing bank statement balance as was shown at the end of June. Remember that when we compared the closing balance on the bank statement, the balance was reflected as a credit balance of 215,800 rand, and this balance was favorable. It will therefore be shown on the credit side as a favorable balance of 215,800 rand. Then we will bring the outstanding deposit that were marked in the cash receipt journal. In this case, we didn't have any outstanding deposit. Therefore, our bank reconciliation statement will not have outstanding deposit. Then the next entries will be to bring outstanding checks that were marked in the cash payment journal as outstanding. It was check 103, amount 3,200. The next check 104, amount 4,500. The last check 106, amount 15,000. Then the concluding entry on the bank reconciliation will always be the adjusted bank balance, which was calculated as a favorable balance in the bank account after we've compared the entries of the cash journals. And the amount that was calculated as a closing balance was a debit of 193,100. In conclusion, the two sides, that is the debit and the credit column, should balance off. Take note of the following entries that should always be reversed and cancelled when reconciling the bank account. Stale or expired check. A check becomes stale after a lapse of 3 months from the date the check was issued. if it is not presented to the bank for payment. Refer to drawer check, usually marked with the letters RD or UN on the bank statement. This is a check that has been dishonored by the bank or a bounce check due to insufficient funds in the account of the drawer, or it could be a post-dated check. The last item is a lost check. Note that the bank will not accept an altered check for redeposit. A bank reconciliation is a recurring process, starting with the initial month and proceeding into subsequent months. This process can be briefly summarized as follows. If we take January to be our initial month, on receipt of the bank statement for January, a comparison with the cash receipt journal, the cash payment journal, bank account balance for January will be done. Similar items will be ticked. Any item that remain unticked in both the statement and the journals will be marked with a circle. Outstanding items on the bank statement will be recorded in the supplementary cash receipt and supplementary cash payment journal. The two journals will be closed off by calculating the adjusted total receipt and adjusted total payments. This will be posted into the bank account. The bank account will also reflect the opening balance for the month. This account will be closed off by calculating the adjusted closing balance. Thereafter, a bank reconciliation statement will be prepared by bringing in all the outstanding items from the cash receipt journal and the cash payment journal. The statement will start first by showing the closing balance as per bank statement. The bank reconciliation will be concluded by bringing in the adjusted closing balance of the bank account. This is an overview approach to a bank reconciliation for the first month. In the subsequent month, when the statement for February is received, the bank statement will then be first compared to the bank reconciliation of the previous month. Similar items will be ticked. Unticked items on the bank reconciliation statement of January will be marked with a circle. The reconciliation will continue by comparing the bank statement with the cash journals. Similar items will be ticked. Items that remain unticked will be marked with a circle on both the statement and the cash journals. With outstanding items from the bank statement, the supplementary cash journals will be prepared. The two journals will be closed off by calculating the adjusted total receipt and the total payments, which will be posted into the bank account. The bank account will also reflect the opening balance for the month. This opening balance was the balance that was calculated in the bank account of January. The bank account for February will be closed off by calculating the adjusted closing balance. The last step will be to prepare the bank reconciliation statement. All the outstanding items, starting from the bank reconciliation statement of January to the cash journals of February, all items that were outstanding will be brought into the bank reconciliation statement. The statement will also include the closing balance as per bank statement of February. This statement will then be concluded by bringing in the adjusted closing bank account balance of February. Try these two exercises. Each present a different scenario in mastering the reconciliation topic.